Good morning, everybody. It's Tuesday, May 20th, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you got any questions or comments, please feel free to drop us a line in the chat area, and we'll be sure to get to it during the show. Overnight markets here, July corn up 6.25 at 4.53 3/4. July soybeans are up a penny and 3/4 at 10.52 1/2, and July Chicago wheat was up 10.25 at 5.39 1/4. No export sales announcements here this morning. Yesterday afternoon, we got crop progress and conditions. Corn came back 78% planted. That was against 62% last week and 5 points above the 5-year average of 73%. Soybeans 66% planted. That was 48% last week, and that is sharply higher than the 5-year average of 53% there. So real good planting pace, as we talked about yesterday morning. Spring wheat, 82% planted, so we're getting pretty close to wrapped up there. It's against 66% last week and 65% for the average. So again, sharply ahead of where we were on average there. And winter wheat conditions, to the surprise of some, dropped 2 points in the good to excellent category. 52% good to excellent. It's against 54% last week and still above the 5-year average of 42%. Good morning, guys. Looking at the radar this morning, we got some pretty good rains rolling through the upper Midwest. I know there was some areas that certainly, given the strong planting pace, they wanted some water behind it. So this is nice. Hopefully we start warming up here up north at least. Other things on people's minds this morning: fast-paced planting. We're getting the crop in really good. I know there's still some spots that need to catch up a little bit, but in general, we're doing a good job there. And I say on the outside markets, could be interesting today. You've got President Trump this morning on the Hill, pushing for the bill. So he's working with Republicans here this morning to try to get some of the last few holdouts on board. And I know within that bill, there's some things that affect us, certainly in our industry. And so I think everybody will be closely monitoring what comes out of Washington. So with that, good morning, guys. Dustin, maybe just a few thoughts here to kick us off this morning, and then we'll throw around the room.
Yeah, thanks, Dan. I think I'd just like to, know some more details about the bill. They're talking about raising the Ark County coverage level from 86% to 90%, which would be huge, right? That extra 4% would basically bring us back up to being close to not in the money for average county yields at today's prices. With the PLC price, we keep hearing that most commodities are going to get a 10 to 20% boost. Well, they're talking about bringing corn from 370 to 410. It's 426 today with the Olympic average. So I'd just like to kind of know what that means. Is that, are they talking about just lifting the minimum and allowing for that 10% improvement from there? Because that would put us at a 427 PLC price if that's the case. So it's not really much of an increase like that you would read on a headline. And then there was some talk about capping it at 330. So I'd just like to know a little bit more about what's happening behind the scenes. If it was a 10 to 20% from where they stand currently, then that would be a huge deal, right? That would put PLC price deep in the money. And that'd be like, kind of signing up your average central Midwestern grower for $50 to $100 an acre in the money put option for those that PLC. So, devil's in the details, I guess. And that could have a market impact for whatever it comes out to be.
Sure. Ben, what's on your mind this morning?
I feel pretty good about late corn action yesterday. It feels like the momentum traders finally kind of got stuffed and sticking with the trend and putting their boot on the throat of corn. I can't tell you how many times over my career I've seen grains break because of a rain, and then it gets here and we're done with that story and we have some recovery. So hopefully we can continue to do that. And I do think that what we're looking at from the government this afternoon could potentially have big impacts on a grower's need to market corn today further. So it'll be interesting to see how that plays out. The wheat market is still heavily short. you don't get any sort of reprieve on that until you get to the index roll, which will be, early June, 5th to the 9th business day. So there's a possibility that we could, see a little further strength there just out of the mechanics of the market. And I think that the managed money short is going to find out what an exit looks like when they carry a position this early in the year. Maybe they come in and they're committed to laying on corn again. But I feel like maybe they're kind of running out of things today in order to be bearish. They're probably, I would guess between 75 and 80% of their position is getting close to being underwater that they initiated short. So we'll see how that plays out.
Justin, we were talking yesterday, yesterday afternoon, anyway, that this is so difficult, and we've talked about it a number of times on the show as well. But when you're hinging on trade deals and geopolitics and everything like that, I mean, the market really showed us yesterday just how it's like you need something. It's gonna take something here, especially with planting pace, good weather to start. Like, give us something to go on here, that at least supports some of the things we talked about.
Yeah, at risk of just sounding like a broken record, I think you press corn and bean prices to these recent lows and it just runs out of steam, because of all the things we've talked about, at least this point in the year. Going into the growing season, I mean, we're, now most of that last 100,000 contracts of new fund shorts is underwater in a couple days. You're pressing into these big government programs, these big kind of underlying, invisible hand support areas, I'll call it, for what we know today. And to Dustin's point, that could be getting raised here in this bill. So I'm still kind of the mind that we're in this choppy, looking for things until we find something new. Weather's too good to really do much, but we have to have good weather to get the kind of numbers the government has written down. And with big government supports, it just doesn't make sense to get aggressively sold here today. Now you get, like I talked about, you get, obviously we've got, if you look at the laundry list of things that you have to have a record crop, we're checking off one of those boxes, right? Good planting, getting some good weather. So we're certainly off to a good start, and that's what I think deflated us here. But then again, you run out of steam as you get back towards the lows. So I do want to say, just kind of a little off topic here, but I think it's going to be really interesting to see what happens with this bill, and just kind of what the attitude is. I mean, there's some really good talking points here on both sides. I don't know that we want to have a bigger bill. One of the things that we ran on was cutting the government deficit. And, the argument from the administration is that we're going to unlock, the U.S. balance sheet. We're going to drill, baby, drill. We're going to bring more investments in, which obviously we had a successful week last week in Middle East. So we're getting companies to move here. We're getting companies to invest in America, but at the same time, we're still raising the debt. So I think it's kind of a slippery slope that it'd be nice to see us attack it from multiple angles, personally, as opposed to just always, doing the same thing with the government. Like, no matter who gets in, we just keep raising the debt. So I think that could have just as many implications for us as whether the PLC prices move up or down 20 or 30 cents. It's just what downstream effects does it have on U.S. dollar, stock market, attitudes about the U.S. I mean, look at bond rates continue to go up, treasury rates go up, right? Japanese, I mean, there's, we're back to above a 7% mortgage rate. So what kind of effects does that have? That could be bigger than, whether it rains or not in this state, personally, on a macro level. So I think this can be telling on where we settle on this bill. And then obviously within that bill, there's going to be, we can dig into all the different agricultural pieces and subsidies, but it would be nice to see us actually say no to some people and cut some things, personally.
Well, it sounds like, right, they want to, the ag secretary was talking about this, but increase spending for farmers and ranchers, and then cut SNAP program spending, which is hard, right? Food stamp spending.
Yes. So to that point, it's, SNAP. I was just listening to a podcast on this. It's the cut that they're going to make is still 50% larger than that budget was in 2019.
Wow.
So, all these programs that we went through because of COVID, just like every government thing ever, it's hard to take them back once you implement them.
Mm-hmm.
Everybody wants that. Everybody wants to have a win for their constituents. And there has to be a point where we just say no and cut. It's a delicate line. So I think, Trump obviously wants higher revenues, USA, bring stuff back, and we're going to earn our way out of it, right? Which could be the case, but that's still a long ways away to be proven.
That's a hard sell too. You're selling somebody on an idea and a theory versus when you look at taxes being revenue, you're cutting revenue and and also spending. It just doesn't.
Yeah, like I like the idea of it. I think there's certainly a path forward to that. With cutting regulation, and we're trying to do it all at once.
Mm-hmm.
And I don't know. Maybe this is the right answer. Maybe you have to do this so you don't have cut too many welfare programs. Obviously, getting rid of fraud and people that shouldn't be on these is a no-brainer.
Yeah.
But I'm thinking a lot of the Republicans, they're going to want probably steeper cuts. So hopefully we land somewhere in the middle, and the stock market's happy, and the investment community is happy, and people are willing to start, ramping up again. I mean, stock market's telling you it's getting more confident.
Mm-hmm.
I know the odds of recession went from 67% 5 weeks ago to 33%. But that's kind of like corn yield estimates, right? Like if the market rallies 50 cents, you drop your corn yield estimate. If it breaks, you raise it. So
yeah,
I don't know.
Yeah, that's what I was thinking. Yeah.
But as far as our markets, like it's just, like corn, for example, December corn, we're every moving average that I track is between here and 6 cents higher with a new big fund short. So, I mean, you can get some big choppy whiplash actions. And if you came in and did some trade deals and the bill kind of went through, I mean, you could see a combination of things where I think volatility, we might be in a little lull here because of good weather and good planting, where kind of leads the way for maybe some more volatile markets.
Yeah,
month or so.
That's a good point. I hate to get, wrapped up in looking at wheat up 10 here this morning in that, but is there an international or a global enough problem in your mind, Justin, to get the shorts spooked a little bit, or do it's just going to be wheat?
Yeah. Ben said it good. I mean, it just takes a right combination of a few things and crossing some moving averages, and where that big fund just doesn't pay anymore. And sometimes they turn their own bear market into a bull market just because of their size. They're oversized in a small market. You look at their overall short position across all wheats globally, it's multiples of the crop. So, that, I mean, just look at like GameStop, right? That famous stock that I didn't know they were still in existence, but just ran in billions of dollars of people because they were too short. I mean, that just happens in our market. So yeah, wheat's like the poster child for doing that. So it's not a matter of if, it's when. Wheat will run in massive shorts, and usually it's a great selling opportunity because it's a 2-day rally, or a $2 rally in like 2 weeks. But yeah, I think it wouldn't take much. Wheat's not like burdensome in my opinion. I know the last WASI report, they raised carry out here, but that's still an estimate based on a crop that's growing. So.
Well, and you touched on yesterday, what are the things that are out there? And I think there's enough things going on outside of the US where we've been off to a really good start that may start to be kind of an underpinning of support, right? Whether it's maybe some issues in China with hot weather. Certainly Mexico for us is a big input. They're on their 3rd year of a drought. Australia is dry. And you look at those things, we've mentioned multiple times about putting together a trade deal. Well, we could be in a situation where we put together a trade deal and we get so much organic demand from problems in other places that we could really get a market. Now, I know that's a lot of ifs and buts, but it's worth keeping an eye on, that those things do have an effect on what global demand looks like. So, well,
and to that point, wheat, in my opinion, at least 10 years ago, cemented itself, U.S. wheat, as the residual supplier to the world.
Yeah.
It is priced not to export. And so if you look at the biggest markets we've had, it's when other countries have problems, right? Because like we love to avoid doing business. So we love to go ration something that doesn't have demand. And when you have the rest of the world all of a sudden, like their export market, when all of a sudden you can't lean on Russia or every other country, that's when the fireworks kind of happen. Because usually it's hedges from other countries in a lot of those scenarios. Australia or Russia, where they're hedged in our crop and there's out of position hedges. So
Well, and I think that's an interesting thing. We say it and we understand about being the residual supplier, but I think it's one of those things that the people that hold the wheat, which there's really a handful of them, hold most of it. When it comes in, you really have to pay them essentially what their carry is in the market on top of freight rates in order to get it out of the U.S. So it becomes it's just kind of a vessel that creates a 10 to 15% return for them every year in carries. And that's what takes us out of global wheat more than anything, is the structure of spreads in the wheat market.
that's a great point. I mean, there's a lot of businesses that's their whole business model, is to build storage and store and carry wheat.
Yeah.
So, no, good point. You have to go way beyond that. And usually it seems like it happens when there's, 3-year wheat that's been in storage earning that money and it's time to clear it out and start over. But yeah, good point.
All right, very good. We'll we'll move to livestock here quickly. Ryland, light volume, higher start for the cattle this week. And the interesting thing to watch, it looks like, is June futures in the hog market are at $8 premium to the index with about 3 weeks to go. So that's going to be interesting to see how that converges or what shakes out there. So what are your thoughts here this morning as we start?
Yeah, no, yesterday was just kind of choppy, kind of mixed trade pretty much across the board. I think, especially on the live side of the market, I think everybody looking at last week's action, just, waiting to kind of see what happens here. So we did see volume back off quite a bit, but beef prices still on the up and up. Choice was up 232 to a new high for the move at 354.81. So, I mean, there's a lot of optimism that's still in the cattle market. It's just a matter of how these packers are going to play it this week. Kills look to be picking up. So I think all in all, there's a little bit of optimism still here that we can continue to see a little bit of a recovery, but obviously kind of slow going in there. We do have a cattle on feed report here out on Friday. Preliminary estimates should be out here by Wednesday, but generally the market's still expecting on feed supplies to be down 1% to 2%. So we'll see what everybody's thinking about placements and marketings, but generally speaking should be in the lower, just slightly lower from last year. So we'll see how that kind of shapes up. But once again, just kind of waiting to see if packers are going to start coming after cattle early on. But yeah, on the hog side of things, absolutely. I mean, there's definitely this premium that's kind of holding up on the cash side of things. So, we want to see things come back here. I mean, we're getting into grilling season. We did see carcass make a new high here for the move, 101.09. So the product market's still pretty firm here. It's just cash has been all over the map. We saw that big drop last Friday, was back up $4 yesterday. So it just seems like the trade's really volatile and not quite sure exactly what to do here. So, just keeping a focus on carcass. And it does kind of feel like that's going to be the big area of support right now. And yeah, which is right? Is it going to be the discount or is it going to be the cash? I mean, there's still quite a bit of time here to figure that out and for those two to converge. But right now, I think you've got a lot kind of baked into the market here on the optimistic side. It's time for to cash to kind of show the move a little bit better.
Very good. Appreciate the update there. We just came into the open. We got July corn up 5 right now. 452.5 is the last. July beans are unchanged, 1050 3/4. And July Chicago wheat's up 12 3/4 now at 541 3/4. I appreciate everybody that tunes in on a daily basis. If you wouldn't mind, throw us a like and certainly subscribe. Doesn't cost you anything to do so, and it'll keep you up to speed on everything that's going on with AgYield. So again, thanks to everybody that supports the show. We're doing this live every day that the markets are open on X, Facebook Live, and YouTube Live, 8:15 Central Time. Appreciate the thoughts and comments here this morning, guys. It was a good show. Hope everybody has a great day, and we look forward to talking to you again tomorrow.
The War Room is proudly presented by AgYield. For over 50 years, the AgYield team has provided grain marketing and risk management solutions for growers across the country. Our veteran consultants harness cutting-edge technologies to pinpoint risk, optimize market performance, and protect your farm's profitability. Discover a new approach to farm revenue management at agyield.com.
Hey guys, Jack here. Be sure to support the show by hitting the like button, leaving us a comment, and subscribing to the channel for all the latest updates. Thanks for watching. We'll see you next time.